Hey, it's Rick. It's Saturday, November the 25th. Just one more month until Christmas. My goodness, what happened to this year? So our weekly market update, I'll go through, and then I wanted to do a little educational session on following the institution's footprints. As we all know or should know that it's the institutions that make stocks move. It's not retail investors like your Aunt Betty. It's the big institutions that move money around. So how do we? I'll show you how I do it at least. Sort of track what they're doing and then try and keep in step with them. So first off to the market, I'll go to start over here on the left. I've ranked the indexes that I follow by performance for the week. Bitcoin led the pack again. Continues to go up. To me, it's not viable here, but it is interesting. Stocks moving above their 40-day moving average. It's staying in this area here, which is as high as it's been since last July. So this is a good sign. It's we want to see this up in this region and stay up in this region. Pretty much the same with stocks above their 200-day moving average. We're still only at 46%, 47%. But that's a long ways off the 22% at the bottom down here. So if this stays here and moves up into here, this is very, very bullish. So quite hopeful for the next month or two. Oil had another recovery of sorts, but this trend still looks down, although it's going to get some support in here. So I don't trade oil, so it doesn't really matter to me. And not too often I get involved in oil and gas stocks. Small caps and mid caps were up almost 2%. So they're holding up quite nicely. What happened? Checked the wrong box. And then the one that I follow mostly is the equal weight S&P 500. And you can see, if anybody's been paying attention, I've now moved to solid green. This 50-day moving average is now turned flat. The 20-day moving average is crossed above it. And so it's all systems go. So I'm stepping up my exposure a little bit. Actually, probably this week a fair bit because I'm finding some really good setups. But always wary that, we could just roll back over here. This solid green area here represents the volume weighted moving average from the peak last February and also from the low in the end of March. And they've converged into this region here, which is coincidental with the rising 10-day moving average. So if we were to roll over this next week or even two, I suspect that we should find some support in here. And if we don't, then the model will move back to probably yellow. But right now, things are looking quite positive. Bonds still heading down or have come up. They're hitting an area of resistance here, so still had just a flat week. And then the dollar was down about 1%, and this is actually a good thing. If the dollar moves down, that's generally good for equities. So there's a reverse correlation there. So let's so that's the state of the market for this coming week. As they say, I'm going to step up my exposure, step up my risk to my model says I can go from 0.5% of my account equity risk per trade to 1.25%. So I'll probably dip I'm sitting on 6 or 7 trades right now that are all basically zero risk. My stop is at break even, so I have some profits to work with. So I'll probably step my risk up to the 1% area for this week and see how that goes. And if it if they start performing, I'll step it up to 1.25. So speaking of that, let's look at what we've got, and then also that will tie into my topic of institutional support. So the first stock I've got, these are just in alphabetical order. COUR. I entered this, does it really matter? 1948, so somewhere in here. Actually, when it crossed this downtrend line. So it's just mushing along. But what I've done here, so hopefully you can follow this. Where I'll go down to the volume here. Where I see volume that is other than earnings days. So I ignore big, but you expect big volume on earnings days. But when I see volume on non-earnings days, that is either green or blue, which indicates the stock was up on the day. In this steep view system, if it's a green bar, it closed in the top 50% of the range for the day. Whereas if it's a blue bar, it was still up on the day, but it as you can see from here, it closed in the lower half of the range for the day, which is not super bullish. You really like to see stocks that close near the top of the range for the day, and then the prospects are pretty good. It's going to continue going up the next day or two. Anyway, so these are what are referred to as pocket pivots. So what we're looking for is days where the volume, up volume, exceeds any of the down volumes in at least the last 10 days. So, for example, right here we had a green volume day, bigger than average volume, and it was higher volume than any of the red days or that preceded it for at least 10 days. So that's an indication that institutions were in the market buying the stock on that day. So each one of these, I track them, and then I plot them on the chart. So in the case of Coursera, it first picked up some institutional interest here back in August, which was right after earnings. So obviously the analysts took a couple of days, liked the earnings, and stepped in and were buying the stock. Then when they sort of filled their boots a little bit, as you'd expect, or the stock drifts off, and then the volume drops way down. And then the stock drifts higher, again on just sort of average volume. And then here they step back into the scene. And we're picking up stocks on these 2 days in September. Now, again, an institution, let's say they want to buy how many shares? This company's got 150 million shares outstanding. So let's say they wanted to buy 3% of the company. They wanted to buy like 5 million shares. They're not going to do it all in one day. They're probably not going to do it in 1 week. They may take a month. They may even take longer. So they're going to gradually accumulate your position. So that's why I like to plot them on these charts. That tells me where the institutional buying is actually taking place. And here, clearly, they're interested up here around the $18 level. Same thing here on the $18 level, here up to, of course, 19. And then the volume has dropped off quite a bit. So I suspect that there's good institutional support then in this range. So that allows me to say on this stock, if it goes above this day here, this is the day I bought it, was Thursday. If it goes above this, the high of this day, I'm going to be a buyer, and my stop goes below here. So that's how that particular one works. Let's look at another. This one's an unusual chart for anybody that's been following me for a while, because I don't buy things off the bottom, but I am starting to look at where stocks are coming out of a stage 1 base and potentially into a stage 2 uptrend, and catch these early. And the interesting thing about Double Verify, you can see that institutions were buying up in here in this run, I guess expecting it to go to the moon. Came out with an earnings release that they didn't like here in 1st of August. The stock crashed quite a bit. This is, again, another example why you don't hold a stock over earnings. And then it's just drifted down, drifted down, drifted down, drifted down, drifted down on just virtually no volume. But now it's interesting. 3 times since in November so far, institutions appear to have stepped in. Now, we did have earnings here on November the 14th. Didn't really affect the price of the stock too much. But obviously volume was much higher than normal the very next day. So institutions are continuing to accumulate this stock. So on that premise, I entered this one at 31.58. So right around here somewhere. I don't have high expectations for this. So already I've raised my stop to break even. Basically, I'm saying if it runs, it'll run up here to 34-ish before it's going to run into trouble. If I get that, great. And I'm no worse than break even. But this has some potential. This will stay on my radar for several weeks, if not months to come. Next is a coal stock. And you look at it and say, I bought it here, this day here. 21st of November, I think it was 22nd of November. So I bought it this day here. But again, look at this at the bottom, the institutions were accumulating the stock. So these doesn't show up really well because there was a big volume day here, but if I scrunch the volume up, you can see it a bit better. So these days here, this volume here was higher than any of the down days for the previous 10 days or more. This was another up day, Well, actually, I could have drawn another one there. That was another up day and above average volume. Then we had a sell-off, which was coincided with earnings. But the stock didn't drop too much. And then now the volume is accelerating, and just scrunch this back down again. And then now the stock has started to explode. Now, there was a big volume a couple of days after earnings. So a lot of people are trapped up here. So I have an exceptionally tight leash. I took some of this off already at $18 yesterday. And my stop is back at break even. So I really don't care what happens. This is getting a little too wild for me, for my liking. PGTI. Again, we had accumulation here at the lows back in May. Then they stopped. There's no big green days at all other than this day here for some reason. They must have had some sort of an announcement because this wasn't, it was in between earnings. And look here, the volume in this whole period of time was really below average. So it was on after this big gap up here that I put this on my radar screen, but I really didn't find a low risk entry to buy it. But now I see the institutions they bought this day, of course. They bought this day, and then they bought yesterday, which I sold some to them because I was in the stock from the 21st. I got in, for some reason I got in this day. Oh yes, that's it. Went above this downtrend line, then had a really bad close. So I thought, oh, for sure I'm going to get stopped out. But the next day it rallied, and then I sold some of it into this move today. And again, my stop's at break even, so I don't care what happens. I suspect this is going to just dodge around here for a while, which is fine by me. Make it another low risk entry to add some more stock in a week or two. A marine shipping company here. Where do we have? Yeah, we had a little bit of institutional buying here. And then we got some on that. They caused this run up here. See, the institutions were buying here and here and here, caused this run up. And then the volume dropped right off. The day of earnings, massive drop down, big, decent volume, big drop down. But the interesting thing of this, let's rip this out here. So the stock opened here, right here, this level right here, if you can see my crosshairs, traded down all day, but then rallied back and closed at the end of the day right near the highs. So obviously there's a lot of institutional support underneath here, right around this price here. And they continued, they're still buying it. They were buying it yesterday, although it did sell off. The end of the day, it only closed marginally higher. So again, I exited a chunk of this up near the all-time high. And I've got a free roll, and the rest I've got break-even stop. And this one here is again a low-level base. Sorry, I got a lot of markings on this chart. And this one, all of the accumulation was being done back here last May, June. So here, 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 and here. This chart is really funky because I had some really weird days in here. I don't know what the hell was going on here. So again, I'm not uber optimistic on this one. I got in here at 57.70 something down here. I'm up a couple of bucks. My stop is a break even, and I'm looking for it to run to 64. But if it does, great. I'll probably be gone most of it then. And then if it turns over and gets me to stop out of break even, I don't care. So again, there's no institutional support on this one. It hasn't been since August, so, and no signs of it yet. So maybe it's coming. This volume is exceptionally low. It's going to need some form of catalyst to get the stock moving. And then I'm just going to give you one to keep on your radar. I've got 6 stocks that are high on my focus list for next week, but I'm just going to focus on one here. This company is it had a big move up in January. Went from like $33 to 50 something, and then it's just gone sideways for the entire year. Oops, going the wrong way here. So we're going sideways for the entire year. But the interesting thing, look where the institutions are buying it here, buying some here, 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 and here. So do you think they're buying it with the intention of watching this thing go down here? I don't think so. So I'm looking for a low risk entry Monday or Tuesday. That I'm going to start building a position in this one. I think it's got some good potential. As far as earnings, whatnot, the earnings grew 800% last year. They're projected to grow by 39% next year. Still has a 40 PE, which is not outrageous. So it's got some good fundamentals going for it. So anyway, I'd put that one on your radar. I'm not saying rush out and buy it. I'm not a financial advisor. None of these are buy sell recommendations, of course. But this is the kind of thing that I'm looking for. This is the kind of tight pattern that I like to see, where you have your waves down, they get shallower and shallower, which indicates there's a lack of supply coming to market. Look at this, the volume down here is like way below average. Now here for the last week to 2 weeks even, way below average. So just nobody's selling the stock. So if I look here, the insiders own 3% of this company, so institutions own 100% of it. So you know, another institution or two come along and show some interest in this thing, and nobody's selling, what's going to happen to the price of this? We could easily go from 52 to 60 in a week. So that's the kind of thing that I'm looking for. Okay. again, probably too much information for most of you, but that's the way I look at the market. If any of you have stocks that you're holding that you want me to sort of do an interpretation of what the institutions are doing with your stock, I'll be happy to do that. I don't have Canadian stocks in this DeepView charting platform, but if they happen to trade, like for example, the Bank of Montreal trades in the US, so I can still look at the sort of the bigger companies and give you the same analysis. This one you can see all the big bars are all pink, means down. So this has been in a void for like a long time. I don't know what happened here. It was a big volume day on this 26th of October. So that could be a good sign for this if you're in it. But where's it going to go? You know, everybody that bought up here is underwater. So it might go from 82 to 86, $4. That's what, 5%. Yippee-ki-yay. That's just not the kind of thing I'm interested in. Okay, that's it for this weekend. Good luck, everybody. We'll talk to you next week.